Investing basics. Once upon a time, it felt impossible to figure out investing. It was only for the super smart or the super rich, and they were usually the same people. Today, the investment club is not so exclusive. We live in the information age. Anyone can invest, and everyone should invest. Let's talk about how to get started. But first, make sure you hit the like button, subscribe to our channel, and turn on all notifications so you never miss an update or a show. Now, on to investing basics. Investing basics. First, what does it mean to invest? Investing can be anything from putting money in a savings account that earns you less than 1% to buying real estate. To invest your money means to put it someplace where it will ideally earn more money for you. Typically, when we talk about investing in finance, we are talking about the stock market. The stock market. The stock market is a virtual market where you can either buy a share of a publicly traded company or lend money to a company or institution. The former is called a stock. The latter is called a bond. In both cases, you earn interest from your investment. With bonds, the interest is usually fixed and it pays off after a number of years. The most common form of bond is a government bond. You basically lend the government money and it promises to pay you back after a certain number of years plus interest. Government bonds are reliable, but the interest rates are usually pretty low. With stocks, you find a company or a mutual fund you like, and you buy shares in that company or fund. The stocks are more or less reliable, depending on the company or fund, but, of course, the interest earned is typically higher. In general, the more risk you take, the more interest you earn. There are other types of investments you can make in the stock market, like annuities, but explaining those will take a whole other show, and you should not get involved in them until you understand them. Today's show just covers the basics to get you started. Stockbrokers. So, how do you get started? Decades ago, you would be a rich person looking to invest, and you might go find a stockbroker. A stockbroker is licensed to buy and sell stocks and bonds on the market. You would tell said stockbroker how much you want to buy or sell, and they would handle the rest. Today, you do not need a living, breathing person to make this purchase or sale happen for you. You can go to pretty much any online brokerage and handle any of your trades there with minimal fees and minimal fuss. Investment advisors. So what about investment advisors? Do you need one of those? Here's where things get tricky. To be a stockbroker, you have to pass a series of tests to get licenses to buy and sell securities on the stock market for other people. But there is no guarantee, nor is there any expectation that the stockbroker is invested in their clients, is looking out for you, or is not simply doing what they need to do to make money. Is that a bad thing? Not necessarily. We all live in a capitalist society where we have to make money to live. Many will argue that taking care of the client is not a priority. However, there is such an expectation on investment advisors. An investment advisor has the job they do primarily to advise the client, that's you, on what is best for you. The expectation is that they are highly educated on the highs and lows, the volatility and the stability of the market. Do they make money off you? Yes, of course they do. But a good investment advisor only makes money when you do. That way, they are tied irrevocably to serving your best interests. Do you need an investment advisor? No, of course not. If you're educated on the ins and outs of the market, if you understand all there is to know about investing, then you can go it alone. Get yourself an E-Trade account and buy, sell, and trade away. But if you're not educated on the market and how best to invest, you are always better off hiring an expert. The best brokerage firms charge minimal fees and again, only make money when you do. Of course, once you understand the market a bit better, can discuss things like index funds and annuities, you very well may just go out on your own if you are interested in taking the time and energy to do it yourself. After all, a study out of Princeton University showed that a blindfolded monkey can choose better performing stocks at random than a highly trained expert can. Why? Because most companies on the stock market are small companies, and small companies tend to offer higher returns in the short term. Again, higher risk, higher return. You could do the same thing the monkey did by simply investing in an all-index fund portfolio in all asset classes all the time. Don't know what that is? Start with an investment advisor. Where to begin investing? Where to begin? That depends on where you are in life. If you are older and have fewer dollars, you may be more risk-adverse and want to start small and wade in. If you are younger and have money to gamble, you can be more risk-tolerant and try new things like crypto. We have a video on dollar cost averaging you can go back and review that will help you understand how to start investing small amounts in reliable and high-earning funds. Start educating yourself. Look into a reliable brokerage firm like Edward Jones, Fidelity, or Charles Schwab and see where it takes you. To sum up, investing means to earn money on your money. You can get started with stocks or bonds, and you can start small or big, low risk or high risk. You don't need a stockbroker, but it might be a good idea to get an investment advisor. Now, before you go, don't forget to hit that like button, subscribe to our channel, and turn on all notifications so you never miss a show. Happy investing!